Kerala 2020 and to the much awaited fireside chat on what can surge the Indian business ecosystem with Rajan Anandan, MD of Sequoia Capital. Your moderator for this session is Umang Papneja. It gives me great pleasure to give you a short bio of Umang. He's a senior managing partner and chief investment officer at IIFL Wealth and has more than 20 years of experience in investments and wealth management. As a part of his role at IIFL Wealth, Umang provides strategic guidance for investment decisions across asset classes, including equities, real estate, fixed income, commodities, and alternatives, with a focus on continuous product innovation. Umang has spearheaded the launch of several alternative investment funds, AIFs, in India, and also serves on the investment committee of several AIFs. Umang holds board positions in a couple of companies, including IIFL Distribution Services and IIFL Wealth Capital Markets Limited. And I was also privileged to listen to them converse about funds and a lot of insider tips. If you want, you can call me later, but it promises to be a fantastic session. Over to you, Umang.
Thank you, Revati, and good evening, everyone. And it's an absolute privilege to be hosting and chatting with Rajan. So I'm not getting into introduction of Rajan. All of you know who Rajan is. But of course, with his new role, and not so new role now, with his new role at Sequoia Surge, we'll obviously try and understand what surges the business ecosystem. So Rajan, can we get started straight away?
Yes, let's do it.
Yes.
Thank you for having me. Greetings to everyone in Kerala. It's one of my favorite states in India. So I know you all normally meet in person, but hopefully you're enjoying the TiCon that's been happening virtually, but hopefully everybody's staying safe. But thank you for having me, Umang and Revati.
Thanks. So, Rajan, so before we get into how to surge our businesses, just wanted to get a sense on, of course, 2020, the discussion can't start without discussing COVID-19, right? And, there's been, I think, some trends which are now irreversible. So, some things now become a habit. And now, of course, the vaccine trade, which after vaccine, I think things are coming back. So what is your sense of before and after? So when I say before and after the vaccine, after the vaccine.
Oh, before and after the vaccine. So look, I think we'll have to see what's going to happen after the vaccine, or when will the vaccine actually get to 1.3 billion Indians, right? I was listening to one of the medical experts that actually said that it's going to take some time, right? Although India is likely to have the vaccine by January, it will still take probably a year and a half, maybe 2 years before we can get everybody vaccinated. Now, the thing is, even before the vaccine, I think what we've seen in digitally enabled businesses, Umang, because I have really visibility to digital and digitally enabled businesses, given my current role at Sequoia. What we see really is across the board acceleration of all digital first businesses and digitally enabled businesses, almost all, with very few exceptions. So I would say, with the exception of let's say international travel bookings or domestic travel bookings, which is probably now at about 60% or something like that, hospitality, which is still I think below 50%, hotel bookings and things like that. Everything else is pretty much at or above COVID levels, right? So if pre-COVID levels, so if you say pre-COVID in India was, call it February 2020, we published this research, TIE, Delhi NCR, and Zinov. We published that in early October, where we looked at data through end of September. But even by the end of September, almost all segments, whether it's e-commerce, whether it's actually food delivery was at about 80% at the end of September. This morning, I saw a tweet from Dipendra Goel, who's the founder of Zomato, that now Zomato's business is actually at well over pre-COVID levels, well over, I think we said 120% of February 2020 levels, right? So even food delivery is now gone above beyond. E-commerce is well above and beyond where it was. Grocery obviously leads the way, online grocery. Electronics was, I think, at 130%. It's probably much higher now. Fashion was slightly below 100%. May still be below 100% because people aren't going out as much. And then if you look at sectors like EdTech, Digital health, they were at 2x. EdTech was, I think, at 2x of pre-COVID levels. Digital health was 5 times of where it was. So things have really accelerated, right? So I would say if you were a digital first business or a digitally enabled business, growth accelerated for those type of companies. And I think as we go into 2021, look, there is going to be something called a like a COVID peak, right? So, in EdTech, it'll be some number. In digital health, it'll be some number, depending on what part of digital health, whether it's telemedicine, online fitness, etc. We will drop from peak COVID levels, right? As people, and I think that's already started happening across most segments. Because if you look outside, most of India is now back on the streets, right? Many people, because they have to be working. I mean, there are very few. A lot of people don't realize this whole work from home concept only applies to about 50 million of the 1.4 billion Indians, because everybody else has to actually go out and work, whether it's in agriculture, logistics, etc. So India has actually been out and about now for many months. So in that sense, I think the peak COVID in most sectors probably already has happened, and we've started seeing sort of a new normal. So I think all sectors will settle at some new normal. I think in digitally led or digitally influenced sectors, I think that new normal will be significantly higher than where we were pre-COVID. So I think globally you've heard that changes that could have taken 5 years has happened in 5 or 6 months, and I really do believe that. I don't know whether it's 5 years exactly. Once everything settles after the vaccine is here, we'll settle at a new normal. That new normal will be certainly much higher than where we were, in terms of penetration levels, adoption levels, Umang, where we were pre-COVID. And growth has accelerated, right? So you look at online grocery, which was quite nascent actually. Online grocery was quite nascent pre-COVID, but today, is much more mainstream. It's still got a long way to go, but it's much more mainstream than it was. And the interesting thing, Umang, I don't know whether a lot of founders think about this, or entrepreneurs. Consumer behavior is very interesting, right? If a consumer does something every day for 60 days in a row, new habit forms, and that is the new habit. And right, a lot of what we have been doing, especially if you look at, let's say, the first 100 or 150 million Indians, the things that we have been doing for the last 8-9 months. So we formed a lot of new habits, right? And a lot of those new habits will sustain.
Yeah, and also, Rajan, so some thought on regulations when we're discussing surge in businesses. Regulations sometimes, at least in the space where I come from, financial services, sometimes when SEBI changes a regulation, a new industry is kind of born, right? So, and when I'm thinking through this, when we read about the change in online consultations for healthcare, say for instance, or I'll come to fintech maybe the next when SEBI announced that fintech players can now set up mutual funds. So how important are regulations changes in creating an industry per se? So your thoughts on that?
I mean, look, I think regulatory changes are extremely powerful, right, for catalyzing innovation. So as you said, if you go back to at the beginning of March of 2020, this year, telemedicine in India was a gray zone, right? There was no clear. Telemedicine was not, quote unquote, I don't want to use the word legal, but was not really regulatory, permitted. And then what we saw with COVID, with the onset of the lockdowns, was that changed, and then telemedicine become, quote unquote, there's a regulatory framework now for telemedicine, and as a result, we saw a significant spike in telemedicine, right? So we went from like literally maybe less than 1,000 teleconsults a day to 50, 60, 70,000 teleconsults a day. I haven't looked at the number in the last couple of months, but during the peak of the COVID, we were tracking that very, very closely. So I think that sort of happened. If you look at we can get into the broader financial services space, but I think there's some great examples of what has happened given regulatory changes, but also new digital infrastructure that has come in place. I think, for instance, the ag reforms, Umang, that have happened, right? The 3 major ag reforms that have happened. I know there's currently, a lot of concern among farmers, and we're seeing. I live in Delhi, so I see what's happening in Delhi. But the reality is, those set of reforms, very, very quickly will start leading to lots of opportunities to build interesting companies, right? That can help improve the lives of farmers, that can make supply chains efficient on the sell side, on the buy side, will actually lead to many more new brands. In fact, as in the venture capital industry, we're always meeting startups. So, it's been very busy season. So this morning we had 4 or 5 companies. Tomorrow I'm actually meeting an ag tech company which only exists because of this change, right? I should say, I mean, they were there, but actually now they're seeing explosive growth because of this change in the reforms in the ag sector. So regulatory changes can be very, very significant unlocks for innovation.
True. Actually, so even so my thoughts on there's what Mr. Nilekani is doing with Samati, which means that whatever HDFC Bank could have probably garnered data over the last 25, 30 years, suddenly that advantage is gone because everybody gets access to that data once the account aggregators come up. So I'm sure a lot of fintech players are waiting for that, and of course you have as much data as probably an old Indian bank has. So of course, so thanks a lot for that input. Now, wearing my public markets hat, when I look at results which happened last quarter, so the NSE 500, which is a very broad-based index comprising 500 companies, so that showed results which I have not seen for many years. So the results, the profit after tax was up 38% year on year. So largely came from cost cutting. And of course, as you said, sales has come back to pre-COVID. Now, when I look at the VC space or the unlisted space, there was some kind of emphasis just pre-COVID, like October, November, December 2019, that profitability is becoming important in that sense, and people wanted to only fund profitable. And suddenly COVID hit, right? So has that changed, or is still the emphasis still are they right now thinking only of a cash runway, or is there still a concept of wanting to get into profitable companies?
Yeah, no, I think, look, it's very difficult to, as a startup, very few startups are truly profitable, Umang, at the EBITDA level or at the cash flow level, right? But I think the focus, as you said, what happened last year, 2019, right? It was really the failed WeWork IPO globally that triggered a sort of almost an instantaneous global sentiment change, right? On a focus on unit economics. So it was actually a focusing on unit economics, which is, do the unit economics work, right? And that was really the question, because up until that point, I would say for probably 4 or 5 years globally across markets, right? US, India, China, pick your favorite sort of startup market. There was this huge push on growth at any cost, right? So WeWork was probably, I mean, company's been written about a lot, but was really a poster child of that. But as with the failed WeWork IPO, I think is when everybody sort of woke up and said, look, we really need to focus much more on unit economics. So it started then. And I would say what COVID did was it increased the focus even more on unit economics, right? Now, obviously it helped when your revenue goes down to zero, you have to, or when your revenue goes down 70, 80%, right? You have to dramatically restructure costs. You have to be much more thoughtful about what you're going to do on things like discounting and so on, pricing and so on and so forth. So I would say today, by the way, one of the things that has happened, Umang, I don't know whether you've read the Thai Delhi NCR Zinov report. If you haven't, I mean, for those founders on the call, you should take a look at it. You can go online and find it. Is we actually looked at what actually happened, and what was remarkable was Indian entrepreneurs were extremely agile in moving very, very quickly, much like the corporates who are public, to significantly restructure their costs, right? Many of them pivoted to very different businesses. A lot of them changed the channels that they were focusing on. Some of them built new products. And as a result, what we've seen is, the burn rates in the cash burn rates in the Indian startup ecosystem, that was quite significant, right? I mean, remember you used to read about it in the Economic Times, right? I remember seeing something, I think 2 years ago, that said that only one of India's top 50 companies was generating any profit at all, right? Outside of InfoEdge, which is obviously public. You look at sort of the private market startups. I think that picture is changing, right? So it's maybe few are still generating profits, but certainly they're losing a lot less, right? And I think Zomato has been public about their results. Every 6 months they put something out, and I think they were losing tens of millions of dollars. This is as per their data, right? And then the burn rate had come down to virtually nothing. So we have seen a very significant reduction in burn rates, a much stronger focus on unit economics. And if you look at investors, I mean, look, we invest across, I think if you look at startup investing, Umang, it really goes from idea stage investing, right, or very early stage investing. You've got a small team, you've got a product, we just got into market. That's where Surge focuses, for instance, all the way through growth stage investing, right? So you have, sort of seed, series A, B, C, D, etc. So I would say, look, at seed, not much has changed. I mean, we still look for amazing founders, going after big spaces. At series A, we're looking for early signs of product market fit on top of sort of great founders going after big markets. But I would say at the growth stage, so if you're looking at raising sort of a series D, series C, series D round, if you don't have strong underlying unit economics, I think it's very difficult to raise money today. And we see that in the market, right? Because as Sequoia, we invest across stages, right? We are an idea to IPO investor. We invest at seed, at A, at B, at growth stages, at pre-IPO. So I would say, very long answer to your question. But startups, look, I mean, very few startups are truly profitable. So we're not really looking for profitable companies. We're looking for growth. I think that is very important, but growth with strong unit economics.
Correct. So Rajan, also, of course, questions are coming in. Please keep them, keep sending them, and I'll read them out at the end of the conversation. So Rajan, for all the founders who are here in this conference, maybe we can discuss a little bit about Sequoia Search, and what exactly should be the things which founders should look at. How should they apply, things like that. Maybe if you can tell our viewers about it.
Yeah, maybe. Thanks, Umang. So Surge, which is Sequoia's early stage, seed stage program, was launched in March of 2019, right? So we're also a startup. We've been up and running now for about a year and a half. So maybe I'll start with why did we launch Surge, right? We launched Surge because Sequoia Capital has been in India for about 15 years. We've been in Southeast Asia for about 5-6 years now. And it's an observation that our partnership had. I mean, I only joined a little over a year ago. That despite all the progress we've made as a startup ecosystem in our region, there continue to be very significant gaps, right? The first gap was, founders had to raise multiple rounds of financing, 2 or 3 rounds of financing before they could go to Series A, right? So because, you raise 2 crores, then you raise 3-4 crores, and then you have to go raise 5 crores before you can actually make enough traction to actually get to a Series A, right? And as a result, if there were 2 co-founders, one co-founder, all they did was try to raise funding, and second was, significant time. Significant time. Sorry.
Yeah. So most of the time, the founder's always raising money. So I think that's what.
Sorry.
What happens. Yeah.
Yeah. I had to get some water. So so basically that was the first issue. I think the second one was there wasn't enough mentoring, right, in the ecosystem for founders. So, they, especially around how they should build their companies, right? Even simple things like how to get the product market fit, or how should they think about hiring engineering. And third was not as much company building support, right? You need a lot of help. You need advice, but you need help on how to build your company. And finally, there's a lot of things we can learn from around the world, but there was no systematic way of bringing all that learning to startups in India and Southeast Asia. So that's really the reason we launched Surge. So Surge, what it is, Umang, is we invest $1 to $2 million in a company. And then we have a 15-week program where it used to be offline, where we'd spend time, across the world, once a week, once a month. Once a month, we spend a week around the world, India, Singapore, China, US. But now it's entirely online given COVID, where we focus on all the important aspects of what it takes as a startup to do now. What should you do now so that you end up actually building a great company, right? A lot of it is actually very focused on here and now. How should you think about building teams? How should you hire engineers? Et cetera, et cetera. How should you build your culture? How should you build products? How do you know whether you have product market fit? How do you should drive growth? So, et cetera, et cetera. So that's number 2. Third is, with every company, we pick 2 or 3 areas. We go very deep to help them on the things that really matter to them. If it's a company that hasn't launched yet, it's all about launching and get to product market fit. If it's a company that has early signs of product market fit, now wants to grow, it's about how to think about growth channels and really drive growth the right way. For some companies, it may be, look, we need to, expand internationally, whatever the priorities are, right? So that's a third. And the fourth one is we also help our companies raise their next round of financing, right? So usually raising Series A can take 4 or 5 months. We try to actually, significantly make that period shorter. We have something called Upsurge, where over a period of 2 or 3 days, we have 35 to 40 of the top Series A investors in India, Southeast Asia, US, China, etc. So think about Accel, Lightspeed, SAIF, Tiger, and so on. Come and meet and have one-on-one meetings with companies, right? So instead of a demo day, each startup will meet 15 to 20 of the top investors in the world, and this is for their Series A, right? So that's really what Surge is, right? So we look at tech and tech-enabled companies. So you have to have sort of a tech component to your business, it's never too early to apply to Surge, right? So we have idea stage companies. So in fact, this current cohort, and we run 2 cohorts a year. So twice a year we run 2 cohorts. Each cohort is 15 to 20 companies. The current cohort is 17 companies. It's never too early. So about 6 of the 17 companies.
And these 15 to 7, yeah, so 15 to 17 would be out of how many applicants?
Out of about several thousand applicants, Umang. So it's about 1 to 2%, 1 to 2% of the companies, because we really try to partner with the absolute best founders that we can, that are truly building, going after opportunities that we think are really large.
Right. So of course, most of the entrepreneurs seeing here will try to get into Surge, but as besides Surge, you also head the entire Delhi, and many of them will not be able to reach Surge. So any advice for entrepreneurs on watching this show before I take questions?
Look, I think if you're an early stage founder, right? I don't know who the audience Umang is, how many are early stage versus late stage. I'm assuming it's a good mix of entrepreneurs, right? But if you're an early stage founder, the only thing that really matters is building a product that some set of users are going to find extremely useful, right? So we call it getting to product market fit, right? The most important thing in the 0 to 1 startup journey is to get to product market fit. And I must say, most founders don't know how to measure it, right? I mean, if you read a lot of stuff on the internet, it says when it happens, when your servers go down, you're working 20 hours a day. Yes, but that doesn't happen all the time, right? But there are lots of other ways in which you can figure out whether you have product market fit or not. So I would say just obsess about, are you making very, very sure who you're building for, what set of customers are you building for, what's the specific problem that you're solving. And then really making sure that you have a 10x better solution to that problem, right? Because that's when you build a distinctive product. I mean, a lot of people don't know this, but Google, where I spent a long time before Sequoia, was the 9th search engine, right? Google was not the first, not the second, not the third, not the fourth search engine, but it was a 10x better search engine than the next best search engine, and that's why Google is Google today, right? So I think just the basics of customer obsession, knowing who the customer is, really understanding the problem deeply, and building a solution that is 10x better. I think if you really get that right in the early days of a startup, what we find is, growth just takes off, right? Yesterday, actually, at Surge, so, when we meet with our Surge founders, at the end of the day, we always invite a seasoned sort of founder who's built a really interesting company, where Nitin Kamath from the founder of Zerodha come, right? And I don't know whether you know this, but, Zerodha does zero marketing, like zero. It's just remarkable, right? And what they built is an awesome product. They're very clear on who their user is, and they build extraordinary trust. So that's amazing, right? I mean, that's the kind of company you want to build, because you just really built something remarkable, right? And I find that is what entrepreneurs don't spend enough time really thinking about, how to build an amazing 10x better product.
Perfect. So I'm starting to take questions, Rajan. So the first one, which has come from Mr. Kumar, is what opportunities are coming up for startups with the manufacturing boost through Government of India's PLI scheme, which is the productivity linked incentives, and changes in labor codes?
Oh, great question. Great question. Unfortunately, unfortunately, I don't invest in manufacturing companies. So, I won't be able to answer that question because I just don't look at manufacturing companies. Umang, maybe you should answer that since you
Yeah.
have a better visibility into manufacturing companies. Why don't you answer that?
Yes, I can try. So, so we're not yet sure whether startups would come in, but it seems definitely, when you look at listed companies and trying to take advantage of the PLI scheme. So, in my sense, first thing, of course, everybody's talking about is you become a cell phone manufacturer hub. So that is clearly, I think, a stepping stone towards what we're talking today. The uh, further penetration of internet, making your imports cheaper because India imports a lot of mobile phones. So if that happens, manufacture happens in India. So that's one. But you're looking at many other things. Like say air conditioning, etc., which is being built up. So to answer your question, Mr. Kumar, so basically, I'm not sure whether there would be enough capital for startups at the manufacturing base yet, but it will have to be bootstrapped for some time before you probably get a private equity firm to kind of come in and invest in the business. So that's my take on it. Now there's another question, Rajan. Um, okay, again, it's related to the what the government is doing. So business ecosystems flourish when there is less interruption of government regulations, and India's IT is a classical example which flourished where the government never brought in regulations. So do you think that digital tax and regulations will slow down e-commerce ecosystem?
Yeah, I mean, I think, look, I think there are regulations that accelerate innovation, right? And there are regulations that slow down innovation. And I think, look, on balance, I do think India, if you look at it, at least, look, I'm going to talk only about the technology industry, Umang, because that is what I know. I mean, I don't know. Although I
Right.
did work at Dell a long, long time ago, by the way. I moved to India 15 years ago to build the Dell India business. I actually we launched a factory in Chennai, large factory. But it's been a very long time since I've looked at manufacturing businesses. But look, I mean, if you look at positive regulation, right? We talked about telemedicine. We talked about some of the agricultural reforms that will create a lot more opportunity. I think there are a lot of positive regulations, right? So, for instance, we didn't talk much about the financial services industry, but if you look at UPI, which is not regulation, but it was public digital infrastructure that was built. The India stack, which is Aadhaar, now over 1 billion Indians have a bank account, UPI, which enables sort of bank-to-bank sort of payments with numbers seamlessly between the cost. And then you look at account aggregator, which is what you referred to, where, which is going to democratize lending, right? If you look at sort of India today, Umang, as you know, has the most advanced digital payments ecosystem in the world. Right? If you go back 4 years, India didn't have a digital payments ecosystem. Like we didn't have one. Right? So we went from like not having one to having the most advanced in the world. And that's a big statement because, China has been at it for a long time, right? Because of, I think, very, very smart and very thoughtful and deeply thought out sort of digital infrastructure combined with regulation, right? So I think regulation can be a massive multiplier for innovation. But at the same time, I do agree that look, we need to make sure that we stay away from regulation that can hamper innovation, that can slow down innovation, that can create more. That can slow things down, like for instance, that can take competitive advantages away of Indian companies. I'll tell you one that we've been very, very focused on for the last year. A regulatory change that will be extremely important for the Indian startup ecosystem, right? Is the ability to list internationally, Indian startups, right? So to be able to to take unlisted Indian companies, Indian startups, and list them directly internationally on foreign exchanges, right? And that will unlock extraordinarily large amounts of capital for some of our startups that will help them expand globally, right? I mean, that's a regulation change. Now, government has announced, I think in Parliament, they announced that this will happen, and now we're waiting for, I think, the final details to be ironed out. So I am of the belief that regulatory changes can be a very powerful, enabler and accelerator of innovation. But we have to be thoughtful. I do agree that we have to be we have to be very, very thoughtful.
Actually, I second your thought, Rajan. So, probably giving my experience on this, there was this regulation called Alternative Investment Funds, which came out in late 2012. So today we're looking at 4 lakh crores of assets, which, all AF managers are managing altogether, which means, so none of these are listed. So potentially, if you just look at how Blackstone is valued, which is 10% of assets, you have collectively 40,000 crores of market cap with all these players. So, suddenly a regulation change can give birth to, a multi-billion dollar industry. So I'll move on to the next question. So is the current polarization of venture capital and PE funding startups is towards platforms versus product companies?
Sorry, Umang, what's the question?
So the current polarization of VC funding startups is towards platforms versus product companies. So people are only funding platforms; they're not funding product companies anymore.
I don't think so. I mean, look, I can't speak for the private equity industry because that's not where I spend my time. I spend my time in the venture capital industry. But actually, if you look at, I don't know what you mean by a platform, right? But Baidu started off as a product, and now obviously they have multiple products, right? Freshworks started off as a product. It was a help desk supports, SaaS company, right? Flipkart started off as a bookseller. It was not a platform, right? I mean, I don't actually don't agree with that at all because I don't think any startup, at least in startups, no startup Umang starts off being a platform, right? It evolves into a platform over a period of time, right? You start off by building a product or a service that targets a very specific user and a set of user needs, and you solve that need 10x better than the next solution that they can find, and that's how you start get going. And then over a period of time, a few of them become platforms. By the way, there are very few platforms in the world, right? In technology, I mean, that's where I spend my time. There are very few platforms in the world, right? Most multi-billion dollar companies are really products, right? And definitely they start off being products. So I think at least in the venture capital business, look, I have never invested in a platform. Now, some of the things that we've invested in have become platforms over a period of time, right? As Sequoia, we were fortunate to be very, very early investors in companies like Google and Apple, Cisco and WhatsApp and LinkedIn. Some of those are platforms today. But when we, for instance, when Sequoia partnered with Larry and Sergey, who were the founders of Google, I mean, they were building a search engine. A search engine is a product. And obviously over time, then Google Android became a platform and so on, right? But that was much, much later.
Absolutely, I fully agree. So Sunil, so the answer there is, first it's a product company and then platforms. Even if you look at the Chinese ones like Pingan, etc., they all started as product companies and later on became platforms. Rajan, the next question is, what is the discount normally investors look for at a priced round stage?
What does a discount mean?
Uh, so I'll just read, verbatim. For a safe agreement, what is the discount normally investors look for at a priced round stage? I think he probably means.
So I guess if you're having maybe the question, Umang, is if you have a convertible note,
yeah,
and let's say you have a cap and a discount, it's 10 to 20%. Normally convertible notes are 10 to 20%. If it's more than 20%, if the investor is asking, it's probably unreasonable. And if the founder doesn't want to give any discount, that's also probably unreasonable. Usually it's a convertible note. A standard, you can either have a convertible note with a cap, right? It says, there's a cap on the, it will convert below this. And usually it's 10 to 20%. And the band is, call it, 10, maybe 5%. If you can get 5% discount, that's pretty good. But 10 to 20%, you should worry about it. That's pretty standard.
Okay. So we have another new question. So what is the response to social capital's criticism of the VC model?
Social capitals, I don't know what exactly the criticism is, right? But an industry that has been so central to creating, so many companies that have been, rather instrumental in changing the world, right? You go back to, companies like Hewlett Packard and, Google and Apple and IBM and Cisco and so on and so forth, right? It's hard to say that it's an industry that shouldn't exist. So I don't know exactly what the social capital criticism is of the venture capital industry, but I can tell you, as an Indian ecosystem, right? I always sort of say, look, what's right for India, what's right for Indian entrepreneurs. No, India needs a lot more capital, right? As you know, Umang. Last year we had $14.5 billion of venture capital funding. You know, China last year I think had north of $30 billion. So over the next decade, I think we're going to see more and more capital coming into India. I think, look, as founders, by the way, as founders, founders should decide, right? Do they want to raise capital? Do they not want to raise capital? Who do they want to raise capital from? I mean, Nitin Kamath is a great example, right? He's very clear that he's not going to raise external capital. He's built India's largest brokerage firm by raising no capital, right? And he's very clear that he doesn't want to raise capital, right? He doesn't want to go public. So, whereas others, as founders, you should decide what is right for you and what is right for your company. Actually, you shouldn't ask the question, what is right for you? You should ask what is right for your company. And then decide, do you want to raise capital? Do you not want to raise capital? Who do you want to raise capital from? So that's sort of the way that I think about it.
So you mentioned about opportunities to the recent agricultural reforms. Which are the areas?
I think in ag, again, right, within ag, Umang, I tend to look at ag tech companies, right? So technology, there has to be some level of technology and enablement. Look, I think there's opportunity everywhere. So Sequoia, has 3 investments in ag. We made our first investment in Surge, actually, with a Surge 2 company called BJAC, that is on the, farmer, it's a sort of digitally enabling one part of the value chain between the farmer and the producer and the manufacturing company, if you will, right? Then we made another investment in a company called DHeart that is trying to sort of digitize both buy side and sell side at the farm level. Third one, which is not announced yet, which is in one part, one segment of the ag value chain. But look, we think there's opportunity everywhere in agriculture, right? But I think the key thing, again, I go back to, right? Who is the customer and what is the problem you're trying to solve? And can you build a solution that is 10x better? I mean, those are the 3 questions I'm always asking, right? Because, just saying, look, there's a lot of opportunity in ag doesn't mean anything, right? Ag can be dairy, ag can be aqua, ag can be, corn, ag can be wheat, ag can be, ag can be like lots of things, right? It can be farmers, it can be producers, it can be dealers, it can be distributors. It can be corporates who are doing farming. It can be drones that are trying to deliver pesticides. I mean, there are literally thousands of ways, areas in ag, right? So, just keep on coming back to this question, right? Who's the user or the customer? What is the problem you want to solve? And can you build something that is 10x better? I found that those 3 questions always leads you to, okay, are you build something interesting or not?
So the next question is, what are the opportunities for startups around the government digital infrastructure? So you mentioned UPI as one. What could be the other focus areas?
No, I think there's a lot, right? So I think on the financial services area, as you said, Umang, right, there's account aggregator. I think there's going to be, Anandan Nilankani had announced Open, right, which is a sort of is going to really enable and democratize lending. I'm sure there's more that are coming. You mentioned the one with with fintech companies getting into the AMC business. On the health side, right? So the national health stack is going to get rolled out, and that's going to create all kinds of opportunities in digital health. And I'm sure the government's sort of working on a bunch of other sectors where they can build this sort of what I call public digital utility infrastructure, right? That kind of think of it as the rails that enables lots of other businesses to be built on top of. I think as entrepreneurs, look, focus on things you deeply understand, right? Because I'm sorry to keep going back to Nitin because I just spent like hour and a half with him yesterday with our founders. He was trading, right? I mean, as you know, he was a trader. He deeply understood trading because that's what he did, right? And then he built a product that he would use first. And then obviously that product has evolved over a period of time. As entrepreneurs, I would encourage entrepreneurs not to get too enamored that, look, edtech is hot, or Rajan said agtech is interesting, or Umang said fintech is going to have a lot of regulation, right? Pick a topic that either you know a lot about or that you're very, very passionate about, right? So let's say you're very, very passionate about agriculture. That maybe you grew up in a rural part of India, you saw your family sort of in agriculture, you started observing things. it's very interesting. This company that's not announced yet as Sequoia investor, both are co-founders of this company, Umang, they grew up in rural India. They grew up in farming households, right? And actually they were in Bangalore and they were working for like a sort of a classic consumer internet company. But when they sort of decided, look, we want to actually go and do something different and build their own companies, they went back to their roots, right? Actually, our founder tells a great story about how she got started. She called up her dad, who's a farmer, and trying to understand what his issues are. And then they went back, they did a lot of research, figured out exactly, and they start building a company that way, right? So either it's something you know deeply about or something you're very passionate about, where you can go and spend a lot of time to try to really understand, who's the user, what's the problem, can you build a 10x better solution?
So, so the next one is customer behavior knowledge and customer problems, solving it the 10x way. Are these the key drivers for startups? As an investor, what should be the general return expectation with a 1% pass rate that we have from the early stage?
Yeah, I think there are two different questions, right? I do think both as an investor and a founder, these are questions you should ask, right? Who's the customer? What's the problem? Can you build a 10x better solution? And if you've already built something, is it 10x better or can it be 10x better, right? I mean, your version one usually is not 10x better. But as a founder, you should have a path towards, how are you going to try to build a 10x better solution? You may or may not get there, right? I do think it's an interesting way to look at both as a founder as well as an investor, especially if you're an early stage investor like me, right? I think in terms of return expectations, look, who knows, right? I mean, Ram Shriram, who I know well, who was an angel investor in Google. He was Google's first angel investor, has, I think returned, 10,000x or something on the company that he invested, right? Whereas, before joining Sequoia, I was a very active angel investor among. I think the normal rule of thumb is, look, if you invest in 10 companies, maybe one, gives you a very, very, but by the way, assuming you know what you're doing and assuming you're good and assuming you're lucky, luck plays a big part of this, especially at very, very early stages. But, as an angel investor, at least, the basic rule of thumb is 1 out of 10 companies will actually, give you very, very strong returns. So let's call it 10%. Then maybe you have 2, 3, 4 companies, maybe give you 3 to 5x return. And then the rest of it, usually is a write-off. So about 50%, as an angel investor, right? If you're good, you're lucky, and you know what you're doing, 50% of your companies probably won't go anywhere. 1 out of 10 maybe will go somewhere. So it's not 1%. 1% is, by the way, 1 to 2% is the surge application to companies we accept and invest in rate. That was the 1 to 2% Umang that we were talking about in surge. That's not the 1% of more than one. If only 1% of your companies that you invest in are going to give you a great return, that's a very, very difficult way to create, returns for your investors, right?
Perfect. So I'll just take one last one, which my colleague asked me to ask you. So, what interesting books did you read in 2020?
Yeah, it's very interesting. One book, if you're an entrepreneur, that I'd strongly encourage reading is a book called No Rules Rules. It's written by, co-authored by the founder of Netflix
Yes.
and Erin Meyer. In fact, last night I hosted a fireside chat with Erin Meyer, who co-authored the book. She's a professor at INSEAD, and Deepak Bagla, who runs Invest India. So it's a great book, by the way. It's a great book around how to think about talent, how to think about culture, how to manage performance. I would strongly recommend that. And then another book I'm reading is Ray Dalio. The book is called Principles, right? Ray Dalio's Principles. And as you guys know, he was an extraordinary investor. But get into the habit of reading. I think a lot of young early stage founders don't read as much, and I think it's something that they should do. Because one thing I'll end up, maybe end with is I find that successful founders, Umang, are extraordinarily curious, are always learning. And I think that's something that is quite underestimated. By the way, if you don't like to read, it's okay. Listen to podcasts or watch YouTube videos, right? Today, the reality is there is so much content out there. And I really hope that a lot of founders, spend more time learning, right? Because it's all about self-improvement. Look, there are, you're just starting up, you want to build a, legendary, enduring company. There are so much that you don't know. But the good news is there's a fair bit you can learn by reading, listening to podcasts, watching videos, and so on and so forth.
Perfect. So thanks, Rajan. So we're done with all the questions, and I'm sure everybody enjoyed it. And thanks to Ty for organizing this. Thank you once again, Rajan.